As far as environmental trends are concerned, I am not, because the key trends are staying. People shifting from chemical to natural ingredient and food and beverage, shifting from old technologies to new LED technologies for lighting, shifting from gas boilers to heat pumps and the like. Of course, I'm worried, like every single economic actor, on the overall economic trends. I think we are going to have a slowdown of the economy as a result of the uncertainty, but I'm sure environmental champions will continue to outperform the rest of the pack.
We were looking at some of the big publicly listed companies this week at CNBC, and some of the announcements suggest that, look, some of the targets are being rowed back. Tractor Supply Company withdrew its carbon emissions goals, BP and Shell reducing their targets, Alphabet, Meta in the tech industry also altering some of that carbon neutrality. Nike had laid off dozens of sustainability managers. I mean, I could just keep on going on the list of changes around ESG. Does it have consequences for the private market? Do you see them follow what the public companies are doing on ESG?
Again, private markets are driven by long-term trends. Okay, you have the privilege of investing, and you can. The jury is not out after a week or after a quarter. The jury is out in a few years. And so, if you look at companies that are outgrowing their peers by a factor of 3, 4, 5 times, because this is what we are discussing here. The last 5 years, if I look at the portfolio that we are overseeing, growth rate have been 3.5 times the rest of the economy. So these companies are growing. These things stay. If anything, what's happening out there as the result of the last policies, the new leadership in the US, is that a lot of players have been getting out of the arena. You know, they've been making big commitments 4 or 5 years ago, and in a matter of days, they can kind of cancel those commitments. So you see the same trends back in the companies that you want to invest in, and you have less competition that is actually competing against you on investors' money.
That's an interesting point, because we are hearing and seeing more and more asset managers retreat from their ESG commitments. And ESG, I think many would argue, has peaked as an investment theme and certainly as a dedicated fund theme. But what are you seeing that others aren't? What makes you double down right now when so many others are pulling back?
No, I know many people are asking me that question, because in fact we are doubling the hires, we are doubling the asset under management, we are investing. Listen, it's 34 years I have been focusing on these trends, and I've seen up and down. Typically the down were related to economic recession. This is probably the first time that the down in the ESG as a flavor of the day is much more related to political flavor and political narrative than to real recession. But again, the trends are there. So the reason we are doubling down is that we actually never felt such a momentum. You have less competition on the deals. You have less competition on fundraising. We raised a lot of money for us, $1.5 billion, in a matter of weeks in the last 9 months. Okay, in probably one of the worst moments in fundraising in private capital in the last few years.